Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Welcome to this special edition of the show regarding ideal retirement. I'm Mark Imperial. My next guest is Rick Dwyer, president and founder of Argallus Financial Group. He's the author of the book, Ask Rick Dwyer, What You Should Know About Planning Your Financial Future and Retirement. As a financial professional since 1987, Rick provides comprehensive, holistic, and unbiased advice to business owners, retirees, and pre-retirees to pursue their retirement dreams. Rick believes that people work for decades to provide for their families, and they should have peace of mind for the second half of life. As a fiduciary, Rick's sole focus is on what's best for his clients. Rick, welcome to the program.
Thanks, Mark. I'm glad to be here and be on your show.
So, Rick, you wrote the book. Who's it for? Who should be reading it? And why did you write it?
Yeah, that's a great question. So I wrote the book pretty much to address people from their 30s to their hundreds. And I know that's a pretty large age group, but quite frankly, people that are getting ready to retire and are retired are the ones I pay special emphasis to. But anybody in that demographic I just gave you, that age group, could benefit from reading this book. And I wrote it because there's a lot of misconceptions out there. I mean, you can read things on TV, on the internet, listen to things on TV and the radio, and you can get opposing views on almost every topic. You should invest all in the market because it's gone up for 9 years. You shouldn't invest anything in the market. You should have your money in bonds and get that fixed rate of return. Don't worry about that. Put your money in CDs. You ought to put all your money in real estate. I mean, the list goes on and on and on. But everybody's goals, dreams, and desires are different. And our goal is to show you how you can get to the comfortable income that you want in retirement and just never have to worry about it again.
So, Rick, to get folks off on the right foot, when folks begin to think about planning for retirement, what should they be asking themselves?
I think the most important thing that people ought to ask when they're getting ready to retire is, how do they want to enjoy their retirement? And I'm specifically not asking, what do you want to do? In other words, I'm not saying, do you want to travel? Do you want to spend time with the grandkids? I'm talking about, when you're in retirement, do you want to be managing your portfolio on a daily basis, or do you want to have things set up so that you know that your retirement is not only going to last for the rest of you and your spouse's life if you're married, or be able to pass on to your heirs or to your favorite charity, and do so in a way that you already know is going to happen? Because that's really the choice many people have to face. They have to face the fact that they're either going to have to wing it because they have no plan and they're just playing it by the seat of their pants, or do they have a plan in place that addresses all of the unknowns that may come up, and try and get that plan as bulletproof as you can. Now, in full fairness, there is no 100% perfect plan, but by working with someone like myself or other fiduciaries out there, you have the opportunity to review your plan on a consistent basis and make those course corrections that you may need to along the way. But unfortunately, there are a lot of people out there, and I think we were just discussing before the show, you saw on a CNBC piece today that 99% of Americans don't work with a financial planner. And that's unfortunate, because a lot of them could be served quite well by working with someone, because even the greatest athletes in our country work with coaches, and they work with coaches so that they get things pointed out that they're not paying attention to. It's kind of like when you're so close to the forest, you can't see the forest from the trees because all you see are the trees.
Yeah, I think one of the biggest things they were stating was, because of so much information on the internet, people think that they can navigate it themselves, but that's what you use a coach for. And you mentioned in sports, because you need somebody to curate that information, because not all of it is tailored for everybody.
Yeah, it's not only not tailored for everybody, it's not even applicable to everybody. I mean, some of the information that's out there, for example, might be geared towards people who make under $80,000 a year. And what people may find shocking is that the top 25% of wage earners in the United States make $89,000 a year or more. So that means if you're making $89,000 a year or more in household income, you're in the top 25% of wage earners in the United States. I do seminars constantly, 2 to 4 every single month, month in, month out. And when I ask that question, what amount of income do you need to have to be in the top 25% of income earners? I'll get answers at anywhere from 200 to 300,000, and that's just not it. It's 89,000. So you wouldn't know that unless you were working with someone, and if you were basing all of your planning based on information that's erroneous, guess what? Your plan's not really going to work out the way you want. And unfortunately, in retirement, you get one shot at it because you get to find out whether you pass or fail at the end.
So I'd imagine that you see so many different types of folks in so many different situations. What would you say is a commonality? What's the most common situation or situations that you find your clients in when they first come to see you?
Well, the clients that come to see me usually have a question. They've reached a point in their life, and sometimes it's early on, sometimes it's later on, but they've reached a point where they just want to know that they're going to be comfortable in retirement and be able to live the lifestyle that they have dreamed of. That doesn't mean it has to be, extravagant. It's just a lifestyle that they want. In other words, it may be that they want to take 1 or 2 trips a year. Maybe they want to buy a beach house. Some don't have that kind of money, but they just want to be able to get up, enjoy life with each other, maybe do gardening or woodworking, whatever it is for them. But what they don't want is to have to worry about how they're going to be able to accomplish that. And they have their resources, and they just want to know that those resources can provide the lifestyle that they want in retirement. And lifestyle is vastly different from one couple to another. And that's understandable. We have different dreams, we have different ideas of what we'd like to do, and we have different levels of wealth. So it's very different from couple to couple, but I'd say the main common denominator is no matter where they are on the economic spectrum, they all want to know that they're going to be able to enjoy their retirement the way that they had dreamed that they could.
So, Rick, there must be moving pieces to this puzzle. What are the most important things that folks need to consider when planning for retirement then?
Yeah, so I think, one of the things that I try and ask people is a question that usually gets their eyebrows going up, and I ask them, do you want to risk being rich, or do you want to guarantee a comfortable retirement? And they think about it for a second, and the ones who say, I want to make sure I have a comfortable retirement, those are the ones that I can work with. The ones that are willing to risk being rich, well, that's a two-edged sword. You can risk being rich, but that means effectively you're willing to gamble. And the clients I work with are not gamblers. They just want to go ahead and take the appropriate steps to make sure that they're going to get the level of growing income, because we have a number of factors to take into consideration. We have taxes, we have risk, which we just talked about, but we also have inflation. Because if you set your income, let's just say your income goal was $5,000 a month, and 10 years from now, if we didn't account for inflation, that same $5,000 worth of income is not going to buy the same $5,000 worth of goods. So we have to take into a lot of different things into consideration. So I hope that answered your question.
Yeah, absolutely. And, what comes to mind right now is we were talking earlier about people trying to find a lot of information on their own on the internet. So that must lead to a lot of myths or misconceptions. So what I wanted to ask you, Rick, is what's the biggest myth or misconception you hear out there about financial planning and specifically planning for retirement?
I think there's a number, and I think the two biggest ones we've already touched a little bit on, and that is, I can just research this on my own, and I can do my own financial planning. Well, you know what? You can go on WebMD and you can also become your own doctor, I guess, but I wouldn't suggest treating yourself if you're ill or need surgery. So we have specialized training. All we work on is helping clients achieve their goals. And as fiduciaries, we're required to do what's in our client's best interest. So I say one of the biggest misconceptions is that you can just research it and do it on your own. That probably goes in the same vein is that you could go ahead and be your own attorney. And while you're allowed to be your own attorney, it's highly suggested that if you need to have an attorney, you get your own attorney. Don't try and be your own attorney. In fact, attorneys, if they need help, don't normally represent themselves. They get another attorney. So one misconception is that I can just research this and do it on my own. I think that's a pretty big misconception. And I think the other major misconception is that I can go ahead and address the pillars in a well thought out methodology that's going to be successful through my retirement. I'm going to go to 3 pillars that we work on all the time with our clients. One of the biggest threats to retirement is taxes. Let's say, for example, you have $1 million portfolio and taxes go up 10%. Well, effectively, if you didn't plan for it, you just lost $100,000 of your nest egg on top of what your normal tax rate is. So a tax rate increase can dramatically not only impact how much money you have to work with, but thereby also dramatically decreasing the income that you have or the length of time that income will last. The second we've talked a little bit about is risk. So risk is the level of risk you're comfortable taking if you're going to have money in the market. You can't have money in the market, whether it's the stock market, the bond market, any kind of market that fluctuates in price, without the willingness to accept some level of fluctuation in value and even losses. So we need to find out what is the number that you're comfortable with so that when those fluctuations happen, you don't deviate from your plan. If your risk tolerance is, let's say, at a conservative level, but your portfolio is at an aggressive level, you're going to have a very uncomfortable time because that portfolio is going to fluctuate way, way more than you want. The next thing, as we touched on a little while ago, is inflation. We need to make sure that your income is protected from inflation. When I ask people, how long would you like your income to last while you're in retirement? And normally people tell me the rest of their lives, and I understand why. They don't want to run out of money. And then I get into inflation, and we talk about the fact that what you want is your income to not only last the rest of your life, but you also want it growing so we can take care of inflation along the way. And when we take those 3 things, inflation, taxes, and risk, put them together, it enables us to wrap it into an income plan to provide growing, stable income that'll last the rest of your life. And we'll have multiple buckets that can be pulled from. So if one aspect of the plan is down that particular year, we have 2 other buckets to work with. And in no one year will the same items be up or down. So we just want that flexibility of income sources, and we want the flexibility to be able to access that cash for different events as well.
Rick, clearly you're passionate about this subject. Could you tell us, what inspired you to become a fiduciary? Tell us about that.
Yeah, so I started in financial services right after I got out of the Navy. I spent 10 years in the Navy and went in and became a stockbroker. Did that for a few years, didn't really like that too much, and went into the mergers and acquisitions consulting side. Did that to about 2005. In 2005, my wife and I relocated to Asheville, North Carolina, and I was pretty much involved with building construction since I was pretty small, actually. And when I was in Asheville, decided to go into construction and did a lot of high-end residential and also commercial building up there. In fact, when I met my wife in 1985, I was still in the Navy and I was building houses at the exact same time. So that's how ingrained building is with me. if anybody remembers what was happening in the 2006 to 2009 timeframe, for a lot of the country, the market in real estate kind of burst in 2007. But in Asheville, we were doing great. We had buyers coming in from other parts of the country. They were buying second homes or buying vacation homes, and they were paying cash. And in 2008, the end of 2008, we noticed things were slowing down, and I was approached by a developer to build a house for the DIY network, and we did. We started in early 2009, I think it was January, but by June, the developer went bankrupt. And that bankruptcy also meant that none of the other houses that we had lined up to build in his other communities we could build either, because there was no more building going on in those communities. What happened, and that's a major blow, and anybody who's in business and dealt with something like that, and there were countless companies that dealt with situations just like mine, so I'm not saying mine's unique. But what happened next also happened to a lot of people, but I never, ever dreamed was possible, because I went to the bank and went to draw down on my credit line to go ahead and start building on land that we had bought and that we owned. And when I'm sitting there with the banker looked at me and said, "Rick, we are unable to lend you any money to build houses." And I said, "Well, I'm not borrowing money for that. I'm not looking for a home loan. I'm just looking to draw down on my credit line that's right here on my statement." And the banker said, "We do not have the funds to lend. We will not be able to help you." And it was at that moment that I realized my life was about to change dramatically, because I realized I had to close down my business, which I did at the end of 2009. And I took all of 2010, I relocated to Jacksonville, Florida, and took a look and had to get a little bit introspective, because when you go through something like that, it's not, you lose. We lost a ton of money. Virtually lost everything my wife and I had built up over the previous 25 years. I went from a really secure future, never thinking I ever had to worry about anything, to really not knowing what the future was going to hold. It was a pretty painful point in my life. And I came to realize, after doing not just research, but talking with some people I really trusted, some mentors that I've known for a number of years, that there were other ways that I could have managed my money, where my money would, the value of some of the assets I owned still would have been dropped in value, but I still would have had access to the cash. When I learned that, those were strategies and techniques that I didn't even know existed. And it was at that point where I realized I needed to come back into the business, but this time as a fiduciary. I became a fiduciary in 2011, January 2011. And my whole single focus is to let people know that you may think you have the best laid plan in the world, but that your plan has a way of being stress tested by Murphy's Law, in ways that you never even dreamed were possible. And in my case, it was that the banks, real estate, and the stock market would all collapse at the exact same time. So what my mission is now is to get people into a position where their plan will survive no matter what Murphy's Law has in mind for them. The goal is to have a plan that will survive any of those events. And you know what? That's not always possible, but that's the goal. The goal is to get people to a point where they just never have to worry about what's going on.
That's quite an adventure that you've been through, Rick. So is there anything that I didn't think to ask that's important that you feel you should share with our listeners?
Yeah, so I touched on it a little bit in the beginning. The main focus of the book is really directed to people getting ready to retire and those that are retired. But I have to tell you, there are a lot of different techniques and strategies that younger folks could take as well. People in their 30s, for example, and even in their 20s, that could get themselves on the road to being debt-free. The biggest problem that we face in the United States today is a debt crisis. We have just a tremendous amount of debt, And I have a feeling that that's going to be the next bubble that bursts for us. When you have a lot of debt, if you run a business or a household and you get your debt to a certain point, well, you reach a point you can't go any further. And then at that point, it's called bankruptcy. The government works a little bit different. They just keep printing money. Well, the problem with that is it only works so far. And we're at a point now where we have so much debt that, eventually the politicians are not going to be able to kick that can down the road. And so what I try and do is work with my clients to help their children and their grandchildren to also get positioned in a way where they never have to worry about taking on too much debt. And if they have debt, we'll work out a plan to help them get that paid off. So I think just to kind of wrap things up, what we try and focus on is helping people get on a solid financial base so that whether they're young and building towards retirement, they don't have to follow the talking heads that tell you to go out and get your mortgage or to pay your car over 60 months with 0% interest. We'd rather you have no debt and you keep all your money and you get the things that you want, and you can do that if you're properly prepared. And for people who are getting ready to retire or they're already retired, guess what? Our goal for them is to help them find out, clearly define what their goals are, and then be able to get them into a plan that they're comfortable with. I think you asked about misconceptions earlier. I think another major misconception people have is that when they go to see a financial planner, that they're going to be told what they have to do with their money. That is not the case. I don't view myself as a dictator when it comes to the client's money. I'm there as a guide. I'm going to show you what you have, what your goals are. We may be able to accomplish all your goals, but we may not be. And if we're not able to accomplish them, then let's prioritize the ones that you want to do and make those the priorities. And then anything left over, we'll start going through your other goals. So it's not just being told what you to do your money. So a lot of people think they're going to lose control. You're not going to lose control. It's us guiding you in a way to make sure that your most important goals are the ones that are the ones that are addressed and primary in the plan, and then we make the other goals secondary goals. So, I do think that a lot of people think that they're going to give up control. They're totally in control. And if someone's trying to tell you what you have to do with your money, then you probably should seek advice from someone else.
Right on. So, Rick, for our listeners out there who resonate with your message and are interested, I know you have an offer that's just for our listeners. Can you tell them about that and how you can help them and how they get a hold of you?
Yeah, so I think one of the first things that people should do, because one of the really interesting things that I find, and I think it's because people forget how devastating the stock market crashes of the early 2000 to 2002 time period were, and the 2007 to 2009. We had two effectively 50% drawdowns in the market back to back. But for people who weren't retired then, who are getting ready to retire, it's hard to know because you were working, you were having a paycheck. But if you were retired during those time frames, a lot of people literally ate through their entire nest egg during those times. So one of the things that we want people to know is what is a risk tolerance level that you are comfortable with. And what we do is a very scientific approach. It's very detailed. And instead of coming up with just being conservative or moderate or aggressive, we actually give you a number. And that number ranges from 1 to 99. And once we know that number, then we'll analyze your portfolio. And let's see if your level of comfort with risk is in line with your portfolio. And so normally, just to do that risk tolerance, it takes us a little over an hour usually to do that. We usually charge about $125. We're doing that for free for anybody that contacts us directly as a result of this recording or by reading our book.
That's fantastic, Rick. So what's the phone number or the website or email that you want them to reach you at?
Yeah, so our website is Argallus. It's ARGALLUS.com. Our phone number is 833 Argallus, and the numbers are 833-274-2558. And those are the best ways to reach us. And then someone would like to email us, they can do info@Argallus, ARGALLUS.com, and we'll get that as well.
Rick, this has been absolutely terrific and fantastic information that you're sharing and stuff that people should know. So I really appreciate you taking the time and sharing with our listeners today. And I wish you continued success for you and for all of your clients.
Thanks, Mark. I appreciate the time we spent.
This has been a special edition of the program regarding ideal retirement, and I look forward to seeing you again on the next episode of the show. I'm Mark Imperial. Take care, and we'll talk soon.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.